Well, hello, everybody, and welcome to Modern Investing with Sasha Starr. I'm Nick Calavita. I'm here with Peter Bennett, and Sasha isn't here yet. Maybe he's making some trades on the big board. But, the markets don't sleep. I noticed, Peter, that even though people do sleep and they're busy, the stock market keeps on going. I haven't checked to see where it's doing today, but
It's up a little.
okay, all right, because I was wondering maybe Sasha had abandoned some positions or something like that. I wasn't really sure,
Yeah.
what's going on. But what I'm trying to do is structure. See, I have some funds that are professionally managed. I don't even look at it except once a quarter, maybe. I figure the money manager better know what he's doing. And then some, which on this show I personally trade, but then I have a problem for the next month being out of town. I'm not gonna have time to look at it, so I got to look at it and say, okay, are these the stocks I want to hold for at least a month? Now, one of them, of course, is FireEye. It's my biggest,
yeah.
it's my biggest problem child right now. You do get your problem children out there, and
Have you lost? Is it down? I have no idea. I didn't like
well,
it at the time, but I
yeah,
had
you
no
didn't like it
idea.
at the time. Well, I want to have a position in cybersecurity, and I haven't looked at it
Yeah.
recently. I was going to look at all the positions, but um, it's like Sasha says. Well, once you take a bath, you now become a long-term investor, I guess.
True that you can. Yeah.
And that seems to
Yeah.
be
I
the
would have. I would have said, why not? See, there's areas I don't know. Like when we get
right.
to the dividend section, I'm gonna
Yeah,
talk about healthcare because I've been dabbling with it, and so I went with a mutual fund, and just like I did with the staples, I've talked about RHS forever. Because I don't know which consumer staples is going to do better, or you could go with
right,
XLP. The same thing here. It's like because I looked
right.
at FireEye and
It's real tough.
I said, I don't know because how do I know? There's so many companies, So
I know.
if I had done anything, I would have gone with maybe ETF or a fund that would do it. That way, you get the losers and the winners, and usually the
Sure.
winners will outperform the losers.
Yeah. Well. Here was the problem with this one because I was looking for a momentum stock. Obviously, it was not a dividend stock that was in the cybersecurity space, and it looked good at the time. But the problem is the CEO made possibly a mistake and probably a brilliant move. We don't know
Oh,
yet.
really?
They go, we're going to sell half our division for like 1.2 billion. It was an area
Oh,
that, yeah, it was an area that had what do they call it? It had not a lot of markup, but was a high growth area. But see, here's
oh.
the problem also. And again, this is something I go, I don't know
That
how.
didn't help the stock. That hurt the stock. He
Yeah, it
sold it.
hurt the stock. He actually brought in
Oh,
1.2
maybe
billion.
because he sold the growth part of it. It's
Yeah,
like
yeah, but see, the thing is,
right.
you go to the capital markets to get capital so you can grow. All right. If it was a division, let's say they had two divisions, and I know they do this in insurance, they'll have a retirement income services and a life division. The minute you dump one of those divisions, it dumped the income stream. It's also something that as an investor, you almost can't see coming. As an
Oh no,
insider,
you
you would
can't. Yeah.
know, but as an investor, I could look at the financials all day and I'd never know that the CEO decided to dump a huge section of their corporation. Well, that created problems on Wall Street because they knew that the earnings would go down and it just
Right.
took a big plummet. Okay, it took its first plummet because I bought it 21, it went down to like 17. Okay, then you
Uh-oh.
love how Wall Street works. Then
I have
what
a feeling
happened?
there's more to this story.
Oh, okay, well, then what happens? It creeped back up to 21.
Oh, okay.
Okay, and so I'm going, well, I should just hold it. And then the earnings report came out, and of course they didn't have the earnings because they sold the dividend. I mean, they
Right.
sold off a huge portion. So then it dropped down to 16. I'm going
Yeah.
like, oh boy, this is wonderful. Now it's creeped back up to 17.
That's not such a big bath. I mean, it's
No,
it's
no,
not good. I hate to
it's
lose
not a
a
big
dollar,
bath,
but
but see what happens is that
hmm
when you're in the market, you can run in this. I think is my one of only two ones that are in the red. I was going to go check all the portfolios, see what was in the red, and this was one of them. And I'm going like, wow, and it's a non-dividend stock. See, now if it was a dividend stock, I wouldn't have a problem with it because I'd say, well, I'll just hold it and keep the dividend. Why not? But it's a non-dividend stock. It's my growth stock. It's my opportunity. It's this wonderful. Well, it doesn't look like it's so wonderful anymore. So anyway, that's FireEye. The CEO's name's Mansadet, and he's going to change the name because he sold the name too to Mansadet. Seriously. So it's going to be Mansonet going forward in a couple months, not
Wow,
FireEye.
that's not a very good name. I don't think so.
No, it
But
isn't. It's a horrible name. But see, if you're
yeah,
an ego maniac CEO,
who
which
knows?
obviously he is, he wants to name the company after himself. So he even
Oh, okay,
stole.
there you go. Yeah, exactly.
So
This is
so
the
he
kind of guy I wouldn't like that management either because maybe he gets a lot on the options for the sale or can raise his compensation. You can't always you have to be careful of management. Although, let me make a few comments about what you said and then you can continue. But the first of all is I want to buy stocks that I hold for life. That's my goal.
basically
I don't do, if I'm going to trade, I'm going to sell an option, which I've even learned more from I'd been doing it before I met Sasha, but even more I see now. Because he always throws out the statistics, something like out of 50 years, selling options outperformed buying options
right,
49 to 1.
right.
And I believe it,
I believe
because
too.
you
Yeah,
become the casino. So if
right.
I'm going to trade, I mostly like to do options. Now, sometimes I'll buy a dividend stock and jump up so high, like Morgan Stanley. When I did great with it, and the dividend went down to like 1.5, and I'm going, this is a risky company to a point, probably going to be fine. But I'm just saying, most of my companies, my goal is to hold for life or hold for decades, because that way you just get the compounded growth and everything. So but and so if I was going to do something where I'm not sure I'm not getting a dividend too, then I might do a mutual fund like RTM is the materials sector, another Invesco fund. I like several of the Invesco funds, although I used to stay away from funds altogether because I didn't want to pay the management fees. But RTM has been very well. It's materials, and it's again 33 companies, I believe, here. And so you spread it out, because you know what? Some companies are not going to exist in 20 years potentially, and others are going to maybe do 10 times or 100 times. So sometimes if you don't know a sector, and I'm going to talk about what I did in the healthcare sector, a small investment, but I spread it out again with certain funds because I don't know. I'm not an expert in healthcare. I'm not an expert in technology. Except for I know certain ones like Amazon and Google and Microsoft are going to win. And so if you're not, I don't know if it's worth it. FireEye might go to 100 just like Bitcoin, or it might go to 0. But I don't know if it's a holder. And my philosophy would be, I don't want to lose money.
Right.
With somebody famous, I think Buffett said, "Don't lose money."
Yeah,
Somebody.
right. That's
Yeah,
one of the
just
keys is
keep
not make
trying to
money.
grow even gradually or whatever, and don't risk too much. But but look, if you don't take any risk on the other side, you get a 0.4% at American Express, and right now I'll mention there's, with the markets are very nervous right now about two things. One, interest rates, because rates are very low right now. So on one side, that makes people desperate, and that's why it's up today, and it's been going up. I have to power up. The market's been drifting up. As a matter of fact, pretty steadily all year. It's the S&P 500, but on one side, if you invest in the S&P 500 ETF, I looked it up today, 1.26% dividend now on the SPY. So that's not a high rate of return. You hope for growth, but the other side is now the treasury rates are for the 10-year, they've drifted upwards in the last month, which is going to be my first point, 0.96 at the beginning of August, last 10 days to 1.12. So you can get 1.12, possibly taxable if it's a taxable account, just over 1% for 10 years. For the 30-year, it's drifted up from 1.86 to 1.99. So you're talking about 2% to stick your money in there locked up for 30 years, or you could sell but take a huge loss potentially. So I think the market at some point, maybe soon, there's kind of a war, as it often is in the market. You have desperate investors who are, I don't know where to get money. I need income. And on the other side, you have people going, well, if I put it in a fixed income, I could get killed. But I saw two things that are starting to make me nervous about the market in general. Although, again, if I'm buying a dividend stock that I'm holding for life, I don't care.
Right.
But as a trading thing and what's going on, first of all, I saw an interesting article in Barron's by a woman from, I think it's called Totem Macro. And, her name is Whitney Baker. And she was saying, just this last week, she expected at the first quarter next year, the Treasury rates for the 10-year to go to 2.5 to 3. That's radical, but she
That is
believes it.
radical. Yeah.
Yeah, but also there's an article in Kiplinger that I just saw yesterday. 10-year Treasury, they're predicting, somebody who wrote it, again, they don't know, will rise to 1.8 by the end of 21 and 2.3 by the end of 22. That's what they're predicting. So if the rates start going up, now all of a sudden, all this desperate money is going to have another problem, and the market is going to have a problem potentially, because you're going to say, wait a minute, if I have the money, money might flow out of these fixed things, saying I'm starting to lose money.
Right.
But then you don't want to necessarily go in the market, because now, wait a minute, maybe I can lock in a 3% 30-year bond, and that sounds a lot better than 2. So it's I think the biggest thing right now in the market. But also, by the way, just looking at the market in general, there's the COVID thing. The Delta variant is back. It's this Delta thing is it's going to go on for a while internationally. Eventually, though, I look past it, because everybody's going to either have the vaccine or have herd immunity. But it is dangerous now. It's turning out it's dangerous for kids a bit. Florida had, I think, roughly 124, 164 hospitalized kids.
Mhm.
And I know somebody who said they knew somebody in South American country, I think it was Ecuador, 26 and 28 years old, died of the Delta variant. So both of their cousins. So the market's scared, but Delta's going to disappear. We may keep masks in New York City for the next 20 years because it's a little crazy, but Delta will disappear. So the market always looks 6 months ahead. So, and unless the company's damaged, a lot of debt, so those are the two big things. Then you have Biden, and then I'll let you take over for a little bit, because I've been talking. But now Biden's tax thing is like, oh, let's add more debt, trillions of dollars in debt. Some of it may be useful, others wasted. Maybe 3.5 trillion is still in negotiation. Nobody knows the tax rates for next year now, by the way. So they're talking about retroactively changing the tax rates from January, which they usually don't do. They usually grandfather it in, and nobody knows that. So it's like, great, another problem, and who knows what damage they'll do there. Although maybe they'll do some good, and it's arguable both ways. And so between that and then the final thing is the office issue I'll mention. Nobody's talking about that except for me, and it may not be as big as I think. But so New York City, the occupancy rate in New York City, June 20%, July 21. Hey, Sasha.
Hi. Sorry,
July
internet
24. So you're looking at 20 to 21 now, 24% over 3 months. Occupancy rate. I mean, 75% of the offices are vacant. There are companies all over. San Francisco, major company, I think Zynga just announced that they will have their employees. They're writing off. They're closing their headquarters in San Francisco. San Francisco is another area like New York, huge vacancies. There, I have a list of about 10 companies, many of which you've heard of, like YouTube. They're writing down some of their office space. They're basically saying, we'll take a loss. We're banning it. We're not going to use it anymore. It's gone. And in about 10 in San Francisco, it's all over. Nobody's talking about this. It's going to hurt the banks. I think they can survive and they'll do okay. And rising interest rates for a little while will probably help them. But in the long run, this is going to hurt them too. So I'll close that long segment with talking about the markets with, I think in the short run, it's going to be rocky. But when I look further, mid to long term, interest rates are probably going to 0 in 7 years, and you better invest that way.
Wow. Okay. Very, very good. On the office rate, the office space vacancy, when I was in New York, you could feel the vacancies there, because I'd walk down the streets, get seats on the subway. No one was there. Walk down the streets. Cars weren't even going through. You could tell that they emptied out Manhattan basically because of COVID. But with office rates, see, here's what would happen, because the insurance industry, as you know, they invest a lot of money into offices. Okay, it's one of their big holdings, and they're so financially strong. Sometimes they'll just let it vacant rather than lease out. But what they do is they'll reposition it into condominiums or housing. So don't be surprised. And I saw that happening in New York. They were taking a certain amount of the office space and repositioning it into housing, because the housing market, like it or not, is tight. At least it's tight here in the Raleigh-Durham area. But I shop residential and commercial all over the country, and I go, it's tight everywhere. I mean,
No, that's a good point.
and
that may save them. That may save
the
them.
thing will save them is they didn't build a lot of residential
Right.
units, and so the thing is these empty offices, not all of them, but some of them could be converted into condominiums, and then they would actually get their rents. But a lot of people that invest in offices, they prefer that because they don't want to deal with the tenants. In other words, residential tenants. I mean,
you have no choice if you have nobody in your office.
I know that. If you don't have any choice, then you have to go that.
But you also have the cost. I mean, look, you take a
Sure.
building that's designed for offices, and all of a
Right.
sudden,
It costs money to rehab it.
Yeah,
I know.
this is not a small rehab because you have to rip out the inside. You have to add plumbing. That would accommodate showers and baths and
and it has to be a
dishwashers.
Yeah, but if you're looking at the choice of an empty building or some cash flow, then the thing is you basically are going to have the hard decision to convert into a condominium style and not just try this office style. But it may be more of a permanent thing than they think.
I think it is.
Because everybody,
permanent.
Peter, as you know, everybody tries to ride out the tide. I tried to do that in 2008. It cost me literally hundreds of thousands of dollars.
No, this is it. I don't think we're going back. I mean, there's first of all, what you're saying though is there's a huge cost, and also that's why I'm nervous about almost all the financials, including medical office REITs, particularly because anybody can convert to a medical office REIT. Just put a sign up and maybe make a few changes. That's the easiest thing. So the medical office REIT is going to go boom probably in a lot of areas. Maybe in an area where they don't have office space, but they can have office space everywhere. Google and I saw it today's paper, but it's every day I'm seeing it. Google just said to their employees, we're offering you 15% less to work if you work at Stanford instead of commuting into the city, but you have to take a 15% cut. But here's the problem. The companies that are saying you have to work in the office or we're going to give you a 15% cut. Somebody's going to say, okay, fine, I'll do that temporarily. And then I'll get a company where they'll let me have a higher salary and I can work from home, because a lot of companies say we're happy to have employees, especially if they're
true.
So there's going to be competition among companies, among Chase is saying I think Chase is saying we want all employees back. You're right. Good luck with that. If the other banks are saying, well, no, we'll let you give you the same salary, even 5% less, or 10% less, and then a lot of times half the employees are saying, I'll stay at home, or a large percentage. This is a change. What it was going to happen. That's what the pandemic did. It accelerated certain trends like low interest rates, and it was going to happen in 10 years, eventually. But now it's like, boom, done. But this is a shock to the financial system. The insurance companies, everybody will have to adjust. And I think the banks and insurance companies are solid enough to get through, but I wouldn't touch them financially now, especially since I think the S&P is a little high.
Yeah, but we also touched on something really important earlier today, and this is the $1.2 trillion spending bill. Earlier today, the Senate just passed another one for $3.5 trillion.
Yeah.
Okay, now when it goes through the Senate, the House may put a rubber stamp on it. Now, the thing that bothers me, we talk about on Economics Monday, are they going to do both $3.5 trillion and 1.2 trillion plus the budget of 3 trillion? Okay, wait.
Who knows?
Who knows? But the thing is, if you think about it, okay, you're talking about nearly 10 trillion in spending for the United States of America. I mean, that is a lot of money moving out. And here's the reason it bothers me. You have to be really concerned about your investment portfolio, because if you lock in these bonds at 1% or 2%, think how bad that's going to be when inflation just skyrockets. And frankly, the market's going to skyrocket because it's tied to the inflationary aspects of spending 10 trillion, which is one reason I'm in the market. I'm happy. And part of it is because, hey, look, Uncle Joe's going to rubber stamp 1.2 trillion. Everything's going to go up. Even in our office, we're thinking about raising our fees for the first time in years, because look what's happening on the ground. Everybody else is raising their prices, and you after a while you don't have a choice, because everything is frankly more expensive. I mean, it's
but in the I see this is short and medium term again. That's why, by the way, I don't have any 30-year bonds, but I have at most a 10-year CD. I have some 5 and 7-year munis, which I lock in at higher. But here's the thing. first of all, my perspective is generally longer term because I look at the 3.5 trillion over a bunch of years and I go, that's nothing, because the country owes 100 to 200 trillion, probably closer to 200 trillion in unfunded liabilities for medical care, and so does the rest of the world, because the rest of the world too. We have free healthcare, but we have an aging population. China, India, South America. So it's not just the U.S., Europe for sure. So we have aging populations. We're going to support them, with free or close to free health care, but we haven't put any money aside for this that we were supposed to put away in some cases for sure. So what's 3.5 trillion over 10 years compared to we owe 150 trillion dollars that's off the books, not to mention other things that are growing in expenses and, so it's crazy. So once the debt, whether this is just accelerating another trend, just like the rest of the pandemic. So let's say they added another 3.5 trillion, which they shouldn't be doing, by the way, since some of it's wasteful. Other of it has benefit, but it's crazy times in politics these days. So it's just accelerating the time when the government's going to say we can't afford to pay anything on our debt in the United States, just like, by the way, the rest of the world. The rest of the world is, we like zero interest rates because we can't afford to add, pay more money into the system on this huge debt we have in other countries, negative interest rates in Germany and other countries. So when the U.S. gets to that wall, which is, again, it's a 40-year trend, by the way, of declining, it's a straight line. So maybe we went a little down, a little up. Next, I think interest rates are going to climb probably, and it will threaten the market next year, maybe 2 years. But in the long run, if you look down the road for investing, then when the government is going to do yield curve control, and they're going to say anything over a certain rate we'll just buy, just like the Fed's doing now, just like they did in World War II, just like Japan did in 2016. 2016, Japan dropped their rates to zero, and they never it hasn't gone up. So they'll just have huge debt, but they won't have any debt service. Right. So then it's but that said, it could be inflationary, but I don't think so. Most, if they control it, which I'm giving it 85%, 80, that it'll be almost zero. But that's why it's good to have 3%. I have 3% in gold right now, 1% in silver, just as a hedge, because if it explodes, it's going to go the other way. And I have a lot of real assets like oil, if the dollar gets oil, real assets, grocery REITs, things like that are going to be pretty solid. But if rates go up, and also even consumer staples will be okay, because consumer staples like P&G, I don't have P&G anymore directly, but I have it through the mutual fund. They can raise their rates. So if inflation kicks up, they'll say, oh, instead of a 2% rate, we're raising it 5%, and people will still buy their shampoo. But it's going to distort the markets a lot. First of all, if rates go down, and then housing prices are going to go through the roof. It helps the rich. The stock market will keep going up for another 5 years. And other certain costs, maybe energy will go up, but a lot of other things are going to be like, eventually people are going to get squeezed by this.
Yep. Well, we should take a commercial break and be right back with Sasha and listen to Sasha speak. So we'll just take a quick commercial. We'll be right back.
Told you I get 100 pitches. You know what I ask people to do? I have a formula for pitching. I call it tease, please, and seize. Okay? You tease with an attention-getting problem. You please by selling benefits and unique benefits that come from the product or the service. And this isn't just a product, a service, a product, a business. What are the unique aspects of that business, and what are the magical transformations, and are there some great testimonials? And then you seize with an irresistible offer.
Yeah, the original Shark on Shark Tank. Yeah, he's on the IBM TV network. So in case you don't know, we got some interesting people. But Sasha, what's more interesting is making money, which is the reason I'm here. And the only reason I had to disappear is one of my clients got a call for one of our government officials for $800,000. They sent him an $800,000 bill. And so they need me to figure a way to defend it. I mean, 800 grand, I guess that would get your attention. So unfortunately, I had to bleep off last week. I'm going like, can't that $800,000 bill wait? The markets don't wait. But anyway,
800,000, even 500,000 would get.
I know it's still a little bit of change here. We got to stop that.
Now, I overheard your previous conversation before the commercial break. I think there is something else has to be mentioned: the labor market, because now many employees are coming to their employer and say, "I need 50% raise in half an hour." Or else I quit. And they just don't care. They just quit their jobs. And you know what? I was thinking a lot during the last week, really, what's happening is I started to go back many years ago, like even, say, 50, 70 years ago. And if you remember, there was a Bretton Woods conference which pegged US dollar to a gold standard. It was $35 that would buy an ounce of gold, and all other currencies would be pegged to the dollar. So nobody could get away from the dollar, and dollar was equivalent of gold because you can always convert gold to a dollar. All that disappeared in 1971 when Nixon sort of took apart US dollar from gold standard. And what do we have today? We have so-called fiat currencies, including dollar and all other world currencies. They're not pegged to anything. The gold sort of got away by itself, and the gold still remain a store of value because the gold, it has 5 critical patterns of what the ultimate currency should have. Divisible, durable, recognizable, portable, and scarce. And gold has all these characteristics. And now you'll be probably impressed with what I'm going to say. I can see now the third element is coming into play beside gold and dollar. It's a cryptocurrency, Bitcoin, of course, number one of it. Because I noticed lately, and I'm watching more than once a day, the correlation between gold prices and cryptocurrencies. And I can see now that cryptocurrencies are eating something from status of gold as the ultimate reserve currency. I notice now that yes, it is eating. It's encroaching on gold. How they do that? Essentially, they claim that they have all these 5 attributes of gold. What gold has, because it's scarce. You cannot go and just say, okay, I have now 1 million Bitcoins. It's impossible. You have to either buy them or mine them or whatever. So whatever energy is spent to mine the new Bitcoins, arguably the gold, whenever company is extracting gold from the ground, it also requires energy, it requires effort, the financial efforts and all kinds of labor and so on to extract gold. So then when you think ultimately, okay, so let's see, Barrick Gold, for example, I'm more familiar with that one. Okay, it's spent in enormous resources and it's not so-called green business as we know it for sure. And so the mining of Bitcoins and other currencies also requires effort and energy or so on. And that makes it scarce. And we know that last Bitcoin will be mined in 2140. So there's still a lot of job ahead of it. So my conclusion is at this time, I may change my mind, but my conclusion is that unless governments of US and other countries will really go a hard line aggressively against the cryptocurrencies for various reasons, but we know almost all of them. The cryptocurrencies are there to stay, and they will be inflicting damages on gold simply because they can duplicate everything what gold has. although it's very different. And because it's relatively young, of course, it's unstable, and the prices are fluctuate widely. It went one day below 30,000, and it was a few months ago 60.
Yeah, it's back to 45 today, but it's a Fibonacci kind of move right in the middle. But here's
Right.
the things I would say, first of all, Sasha, a couple points. One, is it scarce when there are 7,000 cryptocurrencies now being traded? They can say, oh, we have Bitcoin and we're not going to issue anymore. But wait a minute, maybe there's Ethereum or, 7,000 now, and it's doubled every 2 years for the last, 2 years and 4 years. It's increasing. Maybe we'll have 14,000.
Agree, because there are no restrictions of
Right,
creating
there's no restrictions, but also there's no. Is it scarce when you can get another crypto that say maybe tomorrow somebody will say, "Oh, I like this crypto better." It's also saying it won't issue more and it's more protected. So I'll switch from Bitcoin to this. I mean, there's no real value there. But also, the other point is, I think I read an article that says the U.S. needs, not just wants, needs to control to issue their own digital currency. They've been slow, but China did it already. The U.S. has got to do that, in my opinion, because they're going to lose a lot. The U.S. dollar is now the reserve currency, but if a digital currency becomes the reserve currency, then we lose huge amounts of power on the dollar. So why would they allow this? Not to mention the taxation, the black market issues, the fact that it's
the criminal use of cryptocurrency.
right, and the SEC,
Right.
they Geisler has been saying he thinks the Wild West of cryptocurrency, and they're getting to it. And as a matter of fact, there's things in this new Biden, the new package from the Senate that talk about crypto, but they may be talking about like taxing it. As a matter of fact, there was some very harsh regulations in this proposed thing that I believe got passed so far, but you never know what's going to come out. But they even said that a developer of crypto had to report to the government any crypto transaction. So everybody's going to have to report, which is what I would want to do if I was a government. I would say, I want to tax it just like my money. I want to know who's doing it. I want to control the criminals. I want to have my reserve currency. So within a few years, the U.S. is probably going to develop a digital currency. At that point, if the U.S. is possibly taxing cryptos, certainly watching cryptos and knows every reporting and has a digital currency, why is Bitcoin worth $2? To me, it's not, because now I'll just use the US digital. It's just as good. It probably doesn't use as much maybe energy, and so it's energy efficient. It's like there goes Bitcoin down to zero. Maybe it's very
especially if government will subsidize the energy needed to produce this new currency. No, I agree with you on all of that. Now, the defenders of crypto, what they're saying is, and I started with Bretton Woods Conference and when
Right,
it was 1971. Basically, what they're saying is that the governments are encroaching on individuals' rights to have their reserves, their savings, everything, because they're just issuing trillions of new dollars.
You know what? They've always done that. That's if I want to, let's say before crypto, the U.S. taxes my every dollar, sales tax, state sales tax, income tax, that encroaching on me, and they issue only a certain amount of dollars. I want them to issue $1 billion and give it to me. They're encroaching on my rights. It's like that. If you don't have a currency, it's sort of like if you don't have a border, you have no country. If you don't have a currency and control of it, you have no economic system, basically.
Absolutely.
Yeah.
I totally agree with you.
And what happens if there's 20,000 or 14,000 cryptos in 2 years, which has been the trend for the last 2 years and 4 years, and doubling? And everybody's like, okay, I'm just going to stop using the dollar. I'm just going to use crypto, and maybe I can do illegal transactions, or maybe I can pay a criminal, bribes. And it's like, what's good about this? Absolutely nothing.
There's nothing good, and crypto doesn't pay dividends. I mean,
wait, except for one thing I was going to say, except it's good for games.
Okay, right, yeah, but
you know what? The digital currency could be adjusted, I believe. I'm not an expert on this, to play games. Then it's like crypto's valueless. And tulips, you know what? Tulips in Holland were worth going for $200 back hundreds of years ago, and they went whoop, boom, and then now I can buy some tulips pretty cheap, you know, in the florist, you know, some bulbs maybe for $5 and $10, and you know, it's all speculative.
Yeah, but I mean, it's like some people like to specialize on foreign currency translations. I mean, you're betting on small amounts of monetary changes that exist within the system, but still, you're never going to get your big push except through innovation and technology. I mean, that's where if you look at where has all the wealth been made? I mean, the serious wealth, not the nickels and dimes you see in crypto. Sorry, cryptocurrency people
Real
have tuned in.
assets.
Yeah, real assets and also real innovation. Look at Apple. I mean, look at Amazon.
Exactly.
Look at Tesla, but
It's
don't look
called
too close.
fundamentals.
Yeah, it's fundamentals. Look at
Not
Tesla,
Ponzi schemes.
but don't look under the hood at Tesla, but look at Tesla. I mean,
Yeah, I don't know about Tesla.
yeah, I don't know about Tesla because the price earnings ratio, but you know what?
Right.
Our government may bail them out. They're funding Tesla basically with this new law that they're passing, allowing basically funding electric stations around the country. Well, who benefits from that? Tesla or anybody in the EV market? Who's paying for it? You are, Peter, as a taxpayer.
Wait. But the
Okay?
argument would be,
I don't want to hear their argument. You're paying for it, right?
wait. Here's the argument.
Okay.
The world is getting warmer, and we need to,
I don't.
And I am agnostic about this, and we discussed this on Economics Monday, and Ben Banerjee made, some good points about, it. But then I saw other arguments against it, because I saw somebody say the world has increased temperature 1% in the last since 1900 to date, and therefore the UN report, which is so terrible according to the news, but at least this is what I saw at Fox News, and I thought this guy was pretty knowledgeable. He said the world's forecast in the middle forecast at 1.5% for the next until 2100, but but during that 1% increase, humanity gained more wealth by far than ever before. So he's saying we can overcome this 1.5. Although I'm concerned, I'm still concerned. But the argument is, just look at the other side. We need to do something about, pollution. Although EVs are not going to do as much as they think, because they're going to still be using utilities to generate the energy, but they can switch more from coal to natural gas, and natural gas is better than petroleum and much better than coal. So it will help. It will help.
Yeah, but my argument as counselor is if you look at the serious growth, what companies have been doing really well over the last decade or so, Netflix, the biggest performer, that wasn't a cryptocurrency. Then you go look at some of the other companies, Microsoft, that people made millions in Microsoft when I was in Seattle. Millionaires, that wasn't a cryptocurrency. Expedia, you look at Amazon, every time you look at, you're looking at the tech companies that got in, that innovated, and then they created a huge market worldwide. Google. Okay, now you look at cryptocurrencies. You got people that are, basically it's a currency. It's never going to innovate. Gold's not going to innovate either. Gold is just a metal. I'm sorry, there's not going to be any innovation in gold. It's just right. Yeah, and it'll just go up like basically with the inflation. It reminds me of my business, the pension business. I've been at 22 years. It's going to move with the market. It's not going to accelerate. There's nothing new and hasn't been. And if you ever try to innovate, you get thrown in jail. So, what are you supposed to do? So the thing is, I just can't buy into, like, if you're an investor and you want to make a lot of money, you go into cryptocurrencies. Good luck with you, that one.
Yeah.
Tesla would oddly enough be a better bet. Okay. I know I'm cringing, but the thing is,
I don't like Tesla either.
I don't like Tesla either. But if you looked at Amazon back in the year 2000 in the late 1990s, it was 1 billion in the hole with no end in sight of spending. There were articles in Forbes and Fortune. When will Amazon collapse? Now, how is Amazon doing?
Oh, Amazon's my biggest holding through options.
Yeah, so the thing is,
I sold 4,500 option. Yeah. For 2023 with the premium. Amazon's an amazing company.
Yeah,
I mean, that was one of the things I saw this week. Listen to this. And I like these companies exactly. So, although I'm out of Alphabet right now because I think they're a little high, but I have Amazon and Microsoft. But it says last year, Amazon pumped $40 billion back into its own business. making it by far the largest capital investor in the U.S. Alphabet and Microsoft rank first and second among U.S. companies in spending on R&D. So when you look at these companies, like those three, and you say, okay, here's the PE ratio, and here's their cash flow, which doesn't look that bad anyway. Then you say, wait a minute, but what would their PE ratio be is if they said, let's slow down the R&D a little bit, or let's slow down the, Amazon like buys trucks. Every day, their innovations are tremendous. As a matter of fact, today I saw something on Amazon which said, it's a minor thing, but it just illustrates how far ahead they are. They said, from now on, if people are having issues with merchants, they're going to get involved. Amazon's going to get involved. People can complain directly to them. They're so far better. I go to Home Depot's website sometimes to buy something, and I go, I don't even see it, what I want there, and I can get it on Amazon. I needed a sump pump because I had a flood. Home Depot saying, well, you can order it, we're out, and you can get it in a month. Next day, Amazon got a sump pump. It's like, and plus you get the reviews which you trust. You go to Walmart or you go, well, they have 10 reviews, and they, I ordered it. There's other issues there too, but I mean, I like these companies, but Amazon's leaps and bounds over them. Not to mention AWS is growing. So
AWS is their biggest profit.
We're in the information age. This is the point. We were in the industrial age, but that's going to change everything. And that's why I think we're heading for zero interest rates. There is going to be so much stress on the system. There's short-term employment needs, but in the long run, more and more I call up, a company and I hear a machine. And the machines are getting smarter and smarter. I just wanted to show you this one thing. This is a robot. It says GoBot runs 5K. So this robot is designed to run the 5K now. It is slow right now, 53 minutes. But guess who built it? The students at the University of Oregon with only $1 million grant. So this is technology in action, and there's a lot of things robots will be doing in the next 10 years and 15 years. They're going to become part of our lives. We may have housekeeper robots. We're certainly going to have driverless cars. The world is changing quickly, and so technology is the place to make money.
Right. Yeah, that's what I'm saying. That's where you need to go. And of course, one technology stock that I think Sasha's looked on, we just got to check it out now, is NVIDIA. It looks like it's split. I'm sure Sasha's way up to date on NVIDIA. $196 a share. No, it's 100.
It was a split down today, but generally speaking, the outlook on NVIDIA remains the same. And actually, speaking about technology stocks, I don't believe that there will be any substantial rally without participation of all major technology stocks. NVIDIA is one of them, but also Microsoft, Apple, and all other stocks that everybody knows about. And they all have to start rising and lead the market. Right now, they are not leading the market. They're sort of in the doldrums. They're not going down either, but they're not really leading the market. So every day the Dow is trying to climb a little bit higher, and S&P and so on. There will be no decisive move upwards without participation of all major high-tech stocks.
Yeah, you're right. Absolutely. They make up a large percentage. Apple, which I don't like quite as much, but, they make up a large percentage. But also the thing, if you look at what's controlling everything in a sense, is interest rates. So when interest rates go up, people then discount the growth for a Google, because it all depends how you discount the future growth. But I don't discount it that much because, first of all, I think in 7 years we'll be at zero rates, or 8 years, or whatever. At some point, the governments are going to, around the world, they're going to make sure that the rates stay zero unless they lose control. But the Googles and the Amazons, they're very sensitive to interest rates. They're fairly sensitive because, you say, look, if we have the growth is all, again, calculated against the interest rates. So the whole market's, I think, probably September. I'm just guessing wildly. I have no idea. But at some point, all these desperate people for money are going to say, wait a minute, I'm getting 1.26 on the S&P now. it gets to be like the bonds where you say, do I want a 30-year bond at 2% because I could get killed? Maybe I'll wait for higher rates. And rates have gone up in the last 4 weeks steadily, gradually. But if this continues, which I think it will, because there's, quote, fear of inflation, the package that comes through is going to scare people, more money printing, from the government. And so, and the recovery eventually, and, the employment situation exacerbated by the fact that they're paying people to stay home, which is so aggravating. It's like you go anywhere. I go to a restaurant or I go buy, I'm waiting online customer service on the phone. It's like, maybe if they had all their employees, I wouldn't have to wait 2 hours, or an hour, So it's not just about me. I'm just saying it's a lot of people are going to be irritated by that. But in the long run, people come back, but these robots are going to take a lot of these jobs. And it accelerates the process because, look, if you don't have employees, what do? You invest in tech. And you say, okay, I'm going to have a restaurant where people walk in, as I've talked about the Florida restaurant, but I love talking about this. We should go visit that, Nick.
Which one?
Fort Lauderdale. If you're down there, and
I'll be in the second last week of January.
Yeah. So because there's a restaurant where you walk in, a robot maitre d' takes you to your table, a robot takes your order, and then a robot brings you your food. So three robot system, and so. But that could easily spread. It's like, wait a minute, we don't have to pay these people health benefits. They don't argue, they show up on time, and
they show up on time, they leave on time.
Right.
Well, but when you're saying
work
that
24 hours, if you want.
But if you notice, even the financial services sector has moved toward that. When you do these phone calls, everything's automated, voice automatic recognition, and they spend millions of dollars. Why would they do that? Because employees are expensive. So if you're in that area, I agree with you. You're going to basically, if you're in that area, you're going to be displaced. We'll take a quick commercial break and we'll be right back.
I welcome all of you to IBM TV and to this show, which is Dr. Dhawan.
That was quick.
That was a really quick break.
That was quick. It looks a lot like that thread got broke. So we'll just do one more, then we'll be right back. Hopefully the thread's. Okay, that tells me there's.
That was also quick.
That was quick. That tells me there's a glitch in the StreamYard system because that was two of them that went dead on us right away.
And that shows why you do need at least a few employees in case
you do need a few
fails.
people to do
there's
that.
There's some value to having some people.
Well, the thing is, there are certain areas that still like you were heavy into Delta. Like I said, I use Delta a lot, and you could tell that they spent millions on their website years ago. By the way, because if you go use their website today, you can see it's frankly outdated. It was probably state of the art maybe 5 or 10 years ago, but you can tell already the way the system moves through that it's got some serious coding issues. And so somewhere along the line, Delta's got to redo their entire website, and the whole idea was to make it user friendly for people.
Right.
So the people that are in computer sciences aren't going to be out of a job tomorrow because they're going to be redoing the technology.
Certain jobs are going to be very safe. Computer science is this huge demand. Google has a program where they train people for very low cost now. For 6 months, they'll give you a degree. And supposedly you get out. I think you make $80,000 a year. With 6 months of training, and I don't even know if it's full time, but because they're desperate, and I'm sure they're all desperate for employees because you need, the tech. We're in the information age. It's vaporizing a lot of things. There's a book called Vaporized about how so many businesses get vaporized, like Blockbuster Video got vaporized by Netflix, as an example in the book. But there's so many. But education is changing. Office work is changing. It's all technology. But also, a lot of jobs are going to disappear, including driverless vehicles are going to knock out at least 9% of people in America, and people all around the world make their money from driving. Limos, cabs. Those are all probably not going to exist in 10 or 15 years.
I'm going to try this commercial one more time because I think I need the
right.
I welcome all of you to IBM TV and to this show, which is Dr. Dhawan's live chat, and I'm your host, Dr. Sanjay Dhawan. I'm an eye surgeon practicing in New Delhi. The live chat is a show which talks about any and all aspects of life, any subject, anything that concerns the life or it improves its quality is what we will be talking about. How to plan for it, how to prepare for it. So we'll be talking about all of this. Looking forward to seeing all of you every Friday night, 9:30 p.m. to 10:30 p.m. Indian time. Thank you. Bye-bye. Namaste.
That's one of our shows that originate from India. So, well, we have shows from India, Malaysia, South Africa, Nigeria, Switzerland, which you all know, and quite a few other places around the country. And in reality, it's almost like, here's a show. What did you do in reality? He's an eye surgeon. Okay, so the thing is, it's kind of an interesting little gamut on that. But yeah, but see, this was a technology thing. Believe it or not, the problem was, because I looked at my boards, the screen share was running simultaneous with the commercial, and the program wouldn't allow that to take place. So what it did is X'd it out. And I'm going, I never had that before. But the screen share is great because then we could look at the individual stocks. And I did buy more into Kinross Gold, Sasha. And every time I buy, it keeps going down. And every time it keeps going down, I just buy more. Because I'm not a disbeliever in gold, but I'm also, that when it reaches a certain level, I think gold's going to continue to go up because I think the inflation, because your friend Joe Biden's going to spend $5 trillion. That's the real reason, So if you have gold or you have any real estate, it's going to go up in value because there's going to be more dollars chasing it, period, the end. It's nothing rocket science about it.
This is exactly what led me to look more into cryptocurrencies, simply because with all these new trillions of dollars being issued, the gold essentially, instead of going up, it actually went down. It's now just north
Yeah, I
of
saw that.
1,500. So I was in disbelief how that can happen, because it defies all the natural laws. And I looked at the cryptos and I started to see some divergence. I started to see some days where crypto, especially after it's collapsed to 29 some $1,000 per Bitcoin, started to climb higher. And I noticed that in certain days it had decisive move up, and at the same time gold was moving down. So what that tells me, I mean, it could be coincidence. I don't trying to create a new law. I'm not trying to see that there's decoupling of the currencies. What I see is that especially there are a lot of fund managers who are trying to beat the quarterly earnings or so on. They're jumping in and out to cryptos and they enhance their quarterly performance so they can make their shareholders happy. And it's an easy way to make out, because there's much less competition in trading cryptocurrency than in any normal stock or currencies or commodities or anywhere else. So if you are not doing so well and you want to enhance your performance, the easiest way to jump into cryptos and actually sell them short or go long and enhance your performance. So that also, and also I noticed that on channels like CNBC, which is watching a lot of people into financial markets, they are devoting to cryptocurrencies more and more their programming time. I noticed that. So that drives people who have no idea what it is and what it's needed for. And, they're just staring their eyeballs in front of CNBC and watching this cryptocurrencies how it fluctuates. Oh, everybody is making money there. How come I'm not making any money?
Okay. Well, that's interesting, because that means if cryptos get hammered, which I think they will eventually, most likely, then gold may really take off, because now it's like, okay, I got to get out of crypto right away, because, maybe in this legislation, it's like, oh, that really going to hurt crypto, but sooner or later, I think the government has to create their own digital currency. I don't know how long it'll take, a year, 2, 3. And that'll hammer crypto. And also they have to regulate it, tax it. They have to know the transactions. All these things are going to hurt it. Then maybe it'll drive gold through the roof.
It's quite possible. Actually, Peter, in the first place, what's happened when what triggered the events when crypto, Bitcoin particularly, went down from 65,000 to 29 some thousand dollars in a matter of a few weeks?
I don't. Did gold go up?
Sorry?
Gold remains basically stagnant.
Yeah, gold didn't do anything there either.
Didn't
So
do
Didn't do
anything.
anything. Yeah, but at least it's
I
staying.
think I think the gold market. First of all, I think the it's being held artificially down. Probably there's a whole nother discussion, but
It could be.
I think a lot of governments don't want gold to soar and silver, but they can't hold it down forever, probably. But they don't want it to soar because then that weakens their dollar against gold, and maybe then maybe the oil energy countries say, well, we want more dollars, so they want to keep gold down because then it makes the other currencies all over the world weak. So it's 156. So maybe I just want to mention a dividend thing I did. Nothing major at all, but a couple points. One, I sold EPD. I want to disclose that first of all because I like all the pipelines, but I had a lot. I was like 26% in energy, and even in the pipelines, which I think are safe and fabulous. I have 10% in MPLX, 5% in USAC, 7% in TRP, 1% in AM. But of the four, I didn't like EPD. I've always been nervous about them. I took a small loss because, first of all, they're a little bit more natural gas liquids and petroleum than the others generally. And also, I saw or I heard about, and I read articles about that Europe is starting to say no more cars after either 2030 or 2035 are going to run on petroleum at all. So this is the wave of the future. We're going to go to EVs. We don't want any petroleum at all. That's got to hurt the petroleum market and also hurt the natural gas liquids market, which correlates with prices on oil. So EPD was like, okay, that's too much for me and it's too risky. It's probably really solid. They all yield huge amounts. EPD was one of the lower ones at 8%. But so I got out of that. Also, I want to mention on a past show, I said RHS, which I have 10% in, was yielding 2%, but it's gone up so much, it's like only a little over 1.5, but I'm holding on to that. It's consumer staples. I love it. It's Invesco, 33 companies. And then today I did a very small deal, but I'm always like, I love energy pipelines. I like technology a lot. Consumer staples seem safe. Those are the only three sectors I really feel comfortable with, but I'm always, should I get into healthcare or not? So I put 0.25% into two ETFs, and I usually don't even like ETFs necessarily, but it's called THQ and HQL. THQ and HQL, they're yielding 5 and 7%. One's at 0 discount, the other's 5% discount. But what they are, they're Tekla healthcare funds. One is very biotech oriented, and the other is more mainline medical care. So I put in an IRA, first of all, so in case it doesn't do well, at least I'll get the interest payments because you're getting 5 and 7% a year. And I don't even know where the market's going. But as a small bet to get a little more income, I'm willing to do that because maybe these companies, they've been steady for 5 to 10 years, in terms of paying out these dividends because the market keeps going up. So they don't really earn that in dividends, but they make it on appreciation. So it's a nice little diversifier. The way I view it is if rates go up a lot, if this gets hit, well, then at least, when my bonds mature in 5 years or 7 years, I'll be able to, get a higher rate. And it's just part of diversification, just like the gold. So I like those two.
Mm-hmm. Well, I've done a lot of adjustments. Nothing crucial about my strategy. See, most of my investments, whether it's options on stocks, but mostly options, because I'm talking about trading account. I'm not talking about the dividends paying account, because that one is extremely boring, and I'm just collecting dividends every month, and
I don't think it's boring. I like getting dividends every month.
I like it when it comes to, it's like, oh look, I just got a dividend.
I love the boring lifestyle, Sasha.
But I haven't done any trading there for a
you don't have to do anything. You're just collecting money. What's wrong with that?
As long as the company's solid,
as long as the company's solid, you're collecting money, baby.
Maybe it increases the dividend over time.
Yeah, but you got to have some fun, right? So,
no, but some stocks there went higher from where I bought them. Specifically, Pfizer went down big time, and even all this BTI and the Altera and this Enbridge, all of these stocks are getting. Even this Gabelli fund that I have. GDV. They all went higher from
Yeah.
when I bought. Plus, they're keeping paying dividends and so on. So I don't do any adjustments there. There must be a reason for me to do it. So far, I don't see that reason. But in trading is different. In trading, I always have positions that are coupled. For example, if I sold long-term put, I also selling long-term call, or I have basically a pair. Let's see, on Facebook, for example, I sold at 375 and I bought 385 call, for example. So I see, and when the stock moves, because nothing stays the same, so the stock moves.
Is that bullish? I didn't understand the trade, but just to explain to the audience, is that bullish or bearish, or you either way?
This one is bullish, because what I'm doing, I'm buying 375 call, which is bullish movement, but I'm also selling 380. If I bought 375, I'm selling 380, same expiration month and date, and so what's happened is, because the stock fluctuating, and for example, it has 3-4 down days. So obviously, the ones that I sold, they're both going down in value somewhat, both calls. So now I'm creating a little bit of a loss on 375, but I'm getting a gain on 380. So if I still believe that the stock will go higher at some point, because there is a time, of course, on my side. Right. So I'm buying back 380 at substantial profit.
Yeah, exactly. That's the advantage of options. If you have any conviction, you do it. I do that a lot. With Delta, I had protection, and then it went down, and I made a fair amount of money on it. Then, and went down some more, but I had more, options. So yeah, exactly. You protect yourself, and then either way, if it goes against your conviction, if you have protection, you can always adjust that. It's like chess.
Exactly. So I just
2 or 3 moves ahead.
Exactly. So it's like a chess, really. And I'm doing that not daily, but 2-3 times a week. I'm doing that. You know what? It almost reminds me of day trading. You know why? Because if I'm buying that and I'm doing a profit. Now, what's happened if I'm a little bit acted a little bit in haste and stock continue to go down? Now, don't forget that I'm doing only with the stock of Facebook, even Nvidia did few adjustments here and there. It's because we are talking about value, very high prominent stocks, which most likely in time will go high. That's the reasoning behind that. On the short term, yes, they can all go down. Any stock can go down on the short term. And the same thing I've done with Barrick Gold, for example. My price is well below 20, so I'm doing still okay, even that stock it's now trading slightly north of $20 a share. But because I'm selling covered calls, so now all the premiums stay with me. So my price level is going lower and lower and lower. And at some point, I figured out that I will achieve a level of about 1650 on the stock, which is trading still above 20.
Right. So well, just be careful, Sasha. I mean, I just have this hunch. It's totally a hunch. Nobody knows. But I think the market's starting to look a little toppy, because it's harder and harder to find anything, in the dividend area, but even in other areas, it's starting to look toppy. And if interest rates now, people get scared of anything, but in interest rates the next month, 2 months, 3 months, 4 months, start moving up more, people might get scared and start pulling money out of the market. And plus, a lot of times, October's, September's have been very big.
Totally agree with you.
They're very big volatile months. So just be careful.
Doesn't matter, Sasha. $5 trillion of newly printed cash will come in and save the day.
Maybe.
Joe Biden's pushing
but it's not shovel ready, Nick. It's sometimes like Obama did shovel ready projects, and it took a year or more till the first dollar hit or something like that.
A year or more. But see, you can't stop if the government is going to pump in 1.2 trillion, then behind it another 3.5 trillion. and any moron's going to make money in this crazy market, because no matter where the market goes, ultimately it's got to go up.
Yeah, no,
There's going to be more dollars chasing the
in the end,
stock.
I agree with you, because I think
Yeah.
interest rates are going to zero. So
Yeah, interest
it
rates
just
go to
comes-
zero, and the market
and you
goes
have no
off like a rock.
choice. Yeah, there's so
But,
few
but
choices.
gentlemen, remember when I was talking
Oh.
about gold, and one of the characteristics was scarcity.
Right.
And this
Scarcity.
is no longer applicable to US dollars. There's
That's
no
correct.
scarcity. Here's
You're right.
trillions here, trillions there.
No scarcity in any currencies these
Yeah,
days.
right. Yeah, they're
Almost.
going to print and distribute 5 more trillion of newly fresh dollars into the market space. What are you
Right.
supposed to say? The market's going to go down? It can't. It's going to go up because there's
Yeah,
more
you're probably
dollars, and the company stock isn't going to be. They aren't going to issue any more stock. They got
No,
X amount of
you're
stock.
right.
Well,
It's more
actually,
money
to make
to
a
drive
case-
interest rates down, and more money in the
Right.
end, because the governments are going to
Yeah.
want
So,
it. But,
Peter,
that said, I think there's going to be a scare. Maybe people are getting scared of it.
could be.
I mean, look,
could
these
be.
articles and these predictions. If people think the rates are going up, this may not be the good time to buy in the stock market. But again, I'm mostly.
What are they going to do,
It's
Peter?
not
Put the
affecting
money
me.
under
It's
their
like, look, I'm
mattress?
buying dividend stocks, and I'll buy them at any price.
I'm
if they
buying,
look good.
I'm buying
I
dividend
don't even worry
stocks.
about the market. And
Then
also,
you don't
I'll
have to
sell
worry
an
about
option if it looks like I can
Right.
make a huge premium, or on a tech company or whatever I do, Delta, whatever. So it doesn't affect me. But I'm just saying, this is a time the market looks a little tough right now. It looks
It's
a little
tough. I agree with you.
Yeah.
And
But,
we gotta conclude it.
listen, but one more point. Speaking about scarcity,
Yeah.
what scarce is, for example, company like Microsoft, okay? There's X number of shares being already
yeah.
issued and outstanding, and these shares are scarce. Everybody wants shares of Microsoft.
And if they make money, they buy them back. So you're right.
That's
These are companies that do buybacks and have a lot of growth and everything. It's like, yeah, I mean, there's no doubt about it. It's 2:07 though. I think we have
Yeah,
to
we're past the time.
more scarcity. No time to finish.
Yeah, scarcity
Time
is
is
called
very
time.
scarce.
Time
Yeah,
to do
thank
that.
you so
Yeah,
much.
exactly.
Right.
Yeah, sorry, because of internet connection, I was late, but we'll hopefully be spared of that next week, and I hope to see you all there. It's IBM TV financial show. Thank you so much, everybody. Bye-bye.